The U.S. stock markets are up 12% since President Donald Trump has been elected. The Dow is closing in on 21,000. And unlike former U.S. presidents, this president is wrapping himself in the stock market's daily performance. He's branding himself with the performance of the market. Joining me at this time via Skype from Connecticut is money manager, economist, and CEO of Euro-Pacific Capital, Peter Schiff. Peter, welcome to the show.
Hi, I'm actually out in Puerto Rico right now.
Puerto Rico, my bad. The weather sounds a little bit nicer there at this time of the year, I would imagine.
Yes, it's very nice.
Peter, I like the beard, by the way, new look. Listen, it's a dangerous game the president is playing by branding himself so closely with the market's performance. Do you disagree?
Well, I know I agree. I mean, you live by the stock market, you die by it. You know, when he was a candidate, he said it was a big, fat, ugly bubble. And he was right. And now it's a bigger, fatter, uglier bubble than it was then. What Trump should be doing is preparing Americans for a decline in the stock market so he doesn't get blamed for it. This is a bubble. He inherited it. But you know what? Now he owns it. This is his bubble. And so if it pops now, you know, he's going to have to deal with the consequences because he is touting the increase in the stock market as if this is a good thing.
Now, I believe that you've written recently, and of course, you've been on record for saying it for a while, that you believe a crash is coming. And you talked about the bubble just now. For our viewers who may not have seen your interviews in the past, why is this a bubble? Why do you believe there will be a crash coming? We know that the past 8 years, the market went up tremendously under former President Obama based upon the Fed's monetary policy. But this president is talking about cutting taxes, cutting regulation, creating American jobs. Could that not alleviate a bubble?
Well, no. I mean, it's a bubble based on valuation. It's a bubble based on the artificially low interest rates that have provided, the air for the bubble. But, I don't necessarily predict a crash. I don't say a stock market crash is coming. I mean, it could happen, but the market could just go down. It doesn't have to necessarily crash. The bubble can deflate slowly. It doesn't have to pop in a violent manner, like it did in 1987, for example, which was, we just had now the most consecutive up days for the Dow since 1987. And, that ended in a crash. And, I don't know how this is going to end, but I do think the market is very expensive and is going to go down. It's been propped up by the monetary policies that Donald Trump was rightly criticizing when he was a candidate. And if we're going to make America great again, that means the stock market's going down. Because the only way to make America great again is going to be to deflate these bubbles. We're going to have to let interest rates go up. We're going to have real savings and real capital investment. And that means stock prices go down, real estate prices go down, bond prices go down. And Donald Trump has to understand that. He can't try to pretend that, the way to gauge his performance is to look at the level of the stock market. Because that means if the stock market starts to come down, well, then what? Is he going to say, well, it must mean that my policies are bad?
Exactly. I agree with you. It's a dangerous game he's playing. Where would you be investing or advising investors to put their money right now? If if one believes that there's a bubble, we're going to see a decline, what should they be doing?
Well, my strategy has been doing extremely well since January of last year. And during that period of time, investing outside the United States has been far more lucrative than investing within. In fact, year to date, the returns internationally, the returns in emerging markets are killing the returns in the U.S. And look at gold stocks. I mean, gold stocks, again, are the best performing stocks this year. They were the best performing stocks last year. They'll probably be the best performing stocks next year. I think there's a lot of inflation. Inflation is running out of control. We're at officially now 2.5% inflation over the last 12 months. But this is the beginning. Even Alan Greenspan now is saying we're going to have stagflation. And it's not because of Donald Trump. He's not causing it. He's inheriting it. But the economy is going to get a lot weaker. Inflation is going to get a lot stronger. And so this is going to benefit gold. It's going to benefit gold stocks. It's going to benefit emerging markets. And it's going to benefit commodities. So this is where people should be looking. Forget about this Dow 20,000. I mean, the U.S. market is very expensive. There's a lot of downside risk. The upside potential is minimal in real terms. But the real money is going to be made internationally, and it's going to be made in gold and other commodities.
You know, globalization, of course, is in the news. We see that, obviously, you know, that President Trump, I mean, is saying put America first, make America great, put the jobs here, you know, penalizing corporations for moving to lower wages in Mexico, China, et cetera. His critics say, you know, that's yesterday's news. The cat is out of the bag, the genie's out of the bottle, whatever the phrase is. What do you think, Peter Schiff? Is he trying to do something that is undoable?
Well, look, globalization is not the problem. Trade is not the problem. I mean, trade and globalization are a solution to problems. I mean, there's something called comparative advantage. I mean, you're not the best at everything. You don't make everything the best. You're not the most efficient. And the whole idea is you do what you do best, and then you trade, you know, with other nations, and everybody benefits. The problem in America is that we don't do enough things the best the way we used to, because government is too big, because regulations are too many, taxes are too high, and so we don't excel the way we used to. And when Donald Trump talks about America, making America great again, that's what he's talking about. Going back to that, going back to the America that was the most efficient producer of of low cost, high quality manufactured goods. We used to have trade surpluses with everybody. You know, and the reason that we were so productive is because we were so free. We were much freer than everybody else. We had a lot less government than everybody else. And that's not the key today. So what we really need to do is attack the source of our problems, which is big government, excess government spending, taxation, regulation. And we got to roll that back. But we have to realize, too, that there's no quick fix here. We are in a lot of trouble because of years and years of overtaxation, excess regulation, and these cheap money policies that have blown up bubbles at the expense of real economic growth. And unfortunately, Donald Trump has not prepared the electorate for some of the short-term pain that we need to endure in order to get the long-term gain.
And Peter, I got to jump in right there in the interest of time. We thank you for joining us. Right on, good comments. And it sounds like President Trump is talking about the right issues on less regulation, less taxes. Peter Schiff, CEO, Euro Pacific Capital, thank you for joining us, and enjoy Puerto Rico.
Thank you.
When I come